and welcome to World Insight with me, Tian Wei. The program is coming to you live on CGTN. Tuesday is the second day of the current round of China-U.S. trade negotiations at the vice-ministerial level, with the U.S. delegation led by Deputy U.S. Trade Representative Jeffrey Gerrish. On Thursday and Friday, Chinese Vice Premier Liu He is expected to meet with U.S. Trade Representative Robert Lighthizer and Treasury Secretary Stephen Mnuchin. Talks takes place as the clock ticks toward a March 1st deadline, after which the U.S. has threatened to raise tariffs on Chinese goods worth $200 billion to 25% if a deal is not reached. Let's hear what the Chinese Foreign Ministry spokeswoman has to say about the end goal of the ongoing negotiations.
The two sides are expected to build on the consensus they reached in Washington and engage in more in-depth discussions on issues of common concern.
The current negotiations are crucial not only for the two countries, China and the United States, but also for the future of the world economy. That's said by Lin Yifu, the Dean of the Institute of New Structural Economics at Peking University, who is also a former World Bank chief economist. He told me that China is sincere in making the right things happen for all. Do you see it that optimistically?
Well, I think that for China, as far as I know, we have every intention to reach something you just described. Certainly, we need to be responsible stakeholders. U.S. is the largest economy. China is the second largest economy. China is the largest trading nation. U.S. is the second largest trading nation. If both U.S. and China can come together and to understand the challenge we face domestically and internationally, and we both to be responsible stakeholder, not only for our domestic economy, but also for the global economy.
Right. But
there
of
must
course,
be some solution.
China wants to be the equal partner in this negotiation, and in the negotiation, you have to be equal in order to negotiate anyway. But you cannot assume that the other side would also like to do so, even though many people hope so. So if the two cannot come up with some kinds of structural foundation for agreements between two types of economy, developing economies, what would that mean for us?
Well, we always say, we always hope for the best.
Well, I know
but
that.
we prepare for the worst, right?
What are you preparing right now, Professor
Well,
Lin?
preparing, certainly, on the one hand, we show our sincerity in the trade negotiation. We prepare, to help the U.S. to reduce the trade imbalance by increasing our import. And we will also further opening up our economy, so the more U.S. investments, more U.S. export can come to China.
Right.
This we are prepared to do, right? But hope an agreement can be reached. But if it cannot be reached, it's not the end of the day. It's not the end of the world. China still has big potential to grow. Because we are middle-income country.
That's right.
Even people say the excess capacity, but the Chinese government has, carried out the necessary program to reduce excess capacity in steel, in coal, in shipment, right?
Yes.
Not only so, we can do industrial upgrade. Currently, most of our industries are in low, medium, value-added sectors. We can upgrade to high value-added sectors, and it's a part of our development process. If you want to increase your income, you need to upgrade your industry, and we should do that, right? We can further improve our infrastructure.
Professor Lin also told me the world's developed economies are hard-pressed to fix their own problems. This, in turn, leads to social and political woes, which have sparked the current debate on globalization. So how could the world's high-income nations face up to their own problems? Professor Lin Yifu has some ideas to share as well.
I think overall, people feel a lot of uncertainty about, their own economic performance about the global economic situation. Although the weather here is very good, but you see there's a lot of setback in the globalization. And also China, since 2008, has been contributing about 30% to the global growth every year. And now people, feel that further China may lose the steam.
Whether the developed economies are doing well, United States, it is an exception?
I think that overall the U.S. seems to be doing the best. But compared to the potential growth or their performance before 2008, for the high-income country, including U.S., used to grow at the rate of 3% to 3.5%. And U.S. last year, with such a huge tax cut by President Trump, its performance is only about 2.9%,
right,
which is lower than 3 to 3.5%. And also in the past, whenever a country fully recovered from the crisis, they should have a period of time, 1 year, 2 years, to grow at 4%, 5%, sometimes even 6%. And the U.S. since 2008 has not reached that growth rate yet.
Right.
So from these indicators, I think the U.S. has not fully recovered. And other countries in European Union, its growth rate has been around 1.5% up and down since 2008.
Right.
Japan, around 1% up and down since 1991. So the high-income country has not fully recovered to their potential yet.
Right. What do you see for developed economies? Because it's true that economies are still coming into different categories.
Yeah.
What are some of the most important things for them to streamline right now?
Well, actually, the reason why the recovery in the high-income countries has been so difficult because they do not carry out the structural reform. And without structural reform, the whole economy cannot return to a more healthy, more vigorous situation. Yeah. For the structural reform in general, you need to reduce the government budget deficit.
Well, that's not easy.
Yeah. You need to do deleveraging. You need to cut down welfare programs. If they can do that, the economy will be healthier, right? But the difficulty is that the economic growth rate has been under, performance.
Right.
We need to consider some kind of ways to do it. Actually, when I was at the World Bank, I started to promote the use of global infrastructure investments is a way out. Because if you try to do the structural reform, it's contractionary. You need to find some kind of demand to create some kind of demand.
Yes.
To offset the contractionary.
That's right.
And then you can carry out the structural.
But the same thing applies. Where does the money come from, right?
Yeah. But here that the money in a high-income country, they are reserve currency country. They will print the money anyway. If their domestic economy is underperforming, then they will lose the monetary policy, and certainly that will support, their monetary expansion. But the developing country and at the end, if their economy underperform, the government will have to pay more social welfare, social protection. The government budget deficit will be high. So the money will be spent. So you can spend the money for social welfare programs, or you can spend the money to find a way to create a real demand, and that can create a space.
The governance structure right now is very nervous because they have the discontent right now on the street. So if you were in their shoes, what would you do? Of course, the latter. You want to quick fix a problem without thinking about its potential.
Actually, the return for the infrastructure is long term. But when you make the investment, the push up of the demand is immediate. And when you use if you make investment in infrastructure, which release the bottleneck of growth, in the long run, economic growth will be enhanced.
Right.
And in the short run, the demand will be created, job will be created, and it will create a space for carrying out contractionary structural reform. And not only so, it can reduce. You use infrastructure investment, it creates a demand, create job. The government will reduce the need for social protection.
I see.
Social welfare, unemployment benefit.
The world's developed economies are hard-pressed to fix their own problems. This in turn leads to, of course, a lot of problems in their economy and the debate. But the developing countries are also facing their own sets of challenges. What's going on for them, China included, is the eagerness, though, to experiment and to seek alternative solutions to the current problems. Let's hear what Professor Lin Yifu had to say. But the other thing is, what about for the developing and emerging economies? They are not necessarily doing very promising either. I mean, the emerging economy used to be believed by many as the potential, but now we see different economies running into their different own sets of challenges. So, Professor Lin, would they have an easier time to pick themselves up, let's just say, compared to the developed economies, which you just illustrated?
I think that a developing country also under pressure, because when high-income countries, including U.S., European Union, and Japan, still underperforming, and they still contribute, more than 50% to the global GDP. If their economy underperforms, their demand is suppressed, and certainly the trade, the export from the emerging market will be hurt. Before 2008 global financial crisis, the global trade grew, twice, or more than twice the speed of global GDP growth. But after 2008, the global GDP growth reduced. Now the trade growth is even lower than the GDP growth.
Right.
And certainly that hurt the emerging market economies.
Right. So you're seeing, Professor, a trickle-down effect in a way, that it started from the
negative externality to the economic development in the developing country.
That's a very interesting vicious cycle, isn't it?
True.
That you see it started from the so-called developed economies, that are dissatisfaction among some social groups of their economy, and then more pressure has been put externally on the other economies because the internal reform is so hard, they don't want to do it. And then now, when they push to the emerging and developing countries, these countries on the very sensitive areas of the global supply chain also has to suffer as a result of this.
And
not to mention their own economic issues.
The impact, as you said, first certainly directly because through trade, but indirectly because the high-income country, they has not fully recovered, and especially they use monetary policy expansion as a way to support their economy.
There are actually two layers of issues. First of all, these economies has to make sure they understand their own challenges because they are developing and they're taking off. And they are comparatively inexperienced to deal with issues compared to their developed economy counterparts. After all, they never experienced it before.
Because past the high-income country, the developed country was the leaders.
That's right.
Right, and now the leaders, they had a lot of domestic problems. They become inward-looking.
Right.
Not only inward-looking, because sometimes they attribute their problems to other countries.
On the other hand, they also have to deal with another layer of pressure. That is where developed economies, when they are not doing well, or when they are pushing the pressure onto the developing countries, the lower part of global supply chain.
Right.
So
Right.
they have to deal, the latter one has to deal with two layers of things,
Right.
added up. Do they have the capability?
Relatively speaking, the developing country still have a larger room for maneuver. But whether you have the means to really tap into your potential, that is another issue. China, I think,
be
is
specific.
relatively speaking, in a much better position. Yeah. China is a middle-income country, upper middle-income country. And under this kind of downward pressure, certainly we need to clear our house. We need to look into our growth potential, mobilize our resources to tap into the potential. And for this, I think China is in a much better position than other emerging market economy. Because now the global economy is facing the downward pressure. It's common to every country, high-income country, as well as emerging market economy. When you face downward pressures, and especially the downward pressures, comes from the external sources.
Right.
And certainly it's very hard for the developing country to change the situation in the high-income country.
Well, there's a test.
But we can do things at our home.
China is exceptional in a way because it's already the second largest economy, and because it is still maintaining a very high growth rate compared to the other emerging economies. So will the problem coming from the other emerging economies and the least developed economies in the world?
I think that the other, the other emerging markets, certainly they fail. They feel the same pain. And they need to do more domestically. And domestically, in terms of the growth potential, should be similar to China. But they may have less needs. For example, their fiscal position can be weaker. Their saving rate may be low. They may not have sufficient foreign exchange reserve.
Right.
And that will constrain their investment. Yeah. And but developing country, they understand globalization is important. So as I said, last round of the globalization, it was championed by the developed country, the advanced country. But this time, I think the developing country, they already benefit from globalization, and they should carry the torch to continue to champion for globalization.
That's Professor Justin Yifu Lin, the former chief economist of the World Bank, talking to us about the world economy, particularly those of the emerging and developing countries. You're watching World Insight with me, Tian Wei. Still to come on our program.